Assalamu alaikum wa rahmatullahi wa barakatuh. You are welcome back to the CTY e-learning program. The subject still remain financial accounting. This is for the senior secondary school too, and your tutor still is still Mr. Ishabi Olawale Olakanmi. We are on the 4th week of the third term of this academic session, and the topic we are discussing is how to prepare the account of non-profit making organization. The last time we met, we introduced the topic account of non-profit making organization, where we discussed that non-profit making organizations are clubs, societies, and charitable organizations which provide welfare services to their members, as well as promoting group activities. And we said that these organizations are not set up to make profits. We gave examples of non-profit making organizations as the Muslim Society of Nigeria (MSSN), the NASFAT Group, the Ikoyi Club, and as well as the Lagos Island Club. These are the good examples of accounts of non-profit. These are the good examples of non-profit making organizations. And the account we are discussing is how to prepare the books of these organizations. And we said that the major books to be prepared are the receipt and payment account, which is equivalent of the cash book of a profit making organizations, and income and expenditure account, which is also the equivalent of the profit or loss account of a profit making organization. So today we are going to be looking at how to prepare income and expenditure accounts. But before preparation, we need to introduce the account to us. What do we mean by income and expenditure account? So to the topic, income and expenditure account. This is an account which records only revenue expenditure and revenue receipts of a non-profit making organization. It is the equivalent of the profit and loss account of a profit making organization. An income and expenditure account discloses a balance as surpluses or deficits. That is, having prepared income and expenditure accounts, instead of getting net profit or net loss as it was in the profit making organization accounts, we are going to be having surpluses, which means net profit, or which is an equivalent of net profit, and deficit, which is an equivalent of a net loss. What are the features of income and expenditure accounts? The characteristics of income and expenditure accounts. Now, features of income and expenditure accounts. When it is a nominal account, it is a nominal account because it records only revenue expenditure and revenue receipts. So it's a nominal account. It is prepared in the form of profit and loss account. As we said earlier, it is an equivalent of profit and loss account of a profit making organization. It records revenue receipts and revenue expenditure. That is, it's only revenue receipts and expenditure that can be found in an income and expenditure account. It allows adjustment for prepayments and accruals. in the income and expenditure account, there is room for adjustment for prepayment as and accruals. Its closing balance represents surplus or deficit. That is, the balance that we are going to derive from preparing an income and expenditure account is either surplus or deficit. It is used by not-for-profit making organization. Yes, it's an account which is an equivalent of a profit and loss account, but this one is prepared for non-profit making organization. It does not record capital receipts and capital expenditure. Yes, purchase of fixed assets or capital expenses or capital receipts cannot be included in income and expenditure accounts. From there, let's look at the formats that can be used in preparing income and expenditure accounts. This is an illustration of a format that can be used in preparing income and expenditure accounts. Debit and credit side, we have the heading income and expenditure account for the year ended 31st December 2019. We have on the debit side expenditure, while on the credit side income. We have the denomination as naira. Under the expenditure on the debit side, we have rents, items such as rent, printing, postages, depreciation, honorarium, wages, etc., stationaries, meeting expenses. While on the credit side, which is the income side of the income and expenditure account, we have subscription, interest on investments, entrance fees, donations, annual dinner, letting of all, items such as rent received, profit on bar, interest on deposits, and income from sales of tickets. If the income side is higher than the expenditure side, we are going to have surplus of income over expenditure. Surplus of income over expenditure, which will be debited. But on the other hand, if the expenditure is greater than the income, we are going to have deficit. We are going to have deficit, that is excess of expenditure over income. That's the format for preparing income and expenditure accounts. We need to look at some items, some terminologies that are associated with not-for-profit making organizations. These terminologies include subscription. What is called subscription? This is the contribution made by the members to the club or society at regular interval. That is, subscription is the contribution made by the members to the club or society at regular intervals. It can be paid by members in advance or in arrears. It can be paid by members in advance or in arrears. Therefore, we have subscription in advance and we have subscription in arrears. Now, let us talk about subscription in advance. Subscription in advance. This is the amount of subscription prepaid by members of clubs or societies representing their due for next year. This is the amount of subscription prepaid by members of clubs or societies representing their due for next year. That is, some members can pay their subscription for another year during the current year. So if such happen, we refer to that as subscription in advance, and it is classified as liability in the balance sheet because it's liability on the club because they have collected subscription in advance from members. So it's a liability in the book of the club or societies. Also, we have subscription in arrears. We have subscription in arrears. This is the amount of subscription that is outstanding or had not been paid by a member as at the time of preparing the accounts of the club. Subscription in arrears. This is the amount of subscription that is outstanding or had not been paid by a member as at the time of preparing the accounts of the club. What that means is that some members might have not paid up their subscription up to the time the account of the club is being prepared. Such subscription that is yet to be paid as at the time the account of the business is being prepared is referred to as the subscription in arrears. Subscription in arrears is classified as current assets in the balance sheet of the club or society because it is an income that is yet to be collected by the business, by the club or society. So it is classified as a current asset in the balance sheet. Another item that we need to look at is entrance fees. Entrance fees. These are amounts payable when a person first joins a club or a society. Entrance fees. These are amounts payable when a person first joins a club or a society. That is, if somebody wants to join a society now, the amount that he is going to pay to the club for joining the association or society is what we refer to as the entrance fee. They are normally included as income in the year they are received. That is, entrance fees is regarded as income to the club, and it is usually being included in the income of the club for the year they are received. However, some club may capitalize it, that is, they may spread it over a number of years. Some club may decide to spread the entrance fee over a number of years. Another item that needs to be looked at is accumulated fund. Accumulated fund. This is the name used for capital in a not-for-profit making organization. You know, in the profit making organization, we have what we call capital. We have what we call capital. That's the owner shares in the amount introduced by the owner for establishing a business. But when we are talking about not-for-profit making organization, we refer to capital of a profit-making organization as a accumulated fund. Therefore, accumulated fund is an equivalent of a capital of a profit-making organization. And it is the excess of assets over liability of a not-for-profit making organization. It is the excess of assets over liabilities of a not-for-profit making organization. That is, it is the difference between assets and liabilities of a not-for-profit making organization. And accumulated fund is calculated as thus. That is, can be calculated using accumulated fund equals assets minus liabilities. So total asset minus liability equals accumulated fund. So that's the introduction into income and expenditure account, and some of the terminologies that we might be needing in preparing account of non-profit making organization. So that's convenient point for us to round up this class for this moment. Assalamu alaikum wa rahmatullahi wa barakatuh.